Hello and welcome to the Trading Zone. I'm Joe Teague. Welcome to another unpredictable week of action as we've seen all year long. Brian, a very happy birthday to you. Way to go over this weekend, celebrating a milestone. So congrats, man.
Yeah, happy. Yeah, it's a happy 50th for me. So that was it was good. It was a lot of fun this weekend. But we're ready to go. What do we got? We got volatility in the marketplace. Obviously, a lot of action over the weekend on geopolitical front that is moving volatility today. And Joe, what are you seeing with the VIX and volatility?
Yeah, let's take a look at these charts here, Brian. Now, the title of this show is nobody knows what will happen next, and quite frankly, that's okay. And let's just be honest, right? There's a lot of people out there saying, "I know what's going to happen next. This is going to happen, then this is going to happen, and this is going to happen." Nobody really knows. This whole year, Brian, has just been crazy news story after crazy news story, wondering how the next thing is going to top the next, and it just keeps escalating like this bizarre comedy sketch where like things are just getting more and more out of control. Is it going to settle down? No one really knows. That's the whole point. Bottom line is, over time, there are always in history has been crazy news stories. The market has a tendency to go higher. Right now, volatility is just trading like, I don't know. We're kind of at this elevated spot. We're in the range of where we expected to be, on the higher end of the range, Brian, in this VIX index, of where we expected to be, of this uncertainty if things are okay. I do think if the VIX pops above 22, there's some sort of concern out there. There's some bigger risks out there. We're right on the edge of that, of course. So we'll be watching this closely, obviously.
Yeah, I mean, two leading indicators in the market of recent times has been the VIX, and then most recently, maybe Bitcoin is a little bit of a telling story, which is a little bit off its highs. So yeah, you're right. I think that VIX 22 level is something to
Is
watch as a
is
leading
Bitcoin still
indicator.
before 100K, below 100K right now?
Yeah, well, with Bitcoin, I think when I was looking at it here, just looking back at my screen, we got it trading right around 102 and a half.
Okay.
So, it's off its 110 area a little bit, which is maybe a little concerning. And then you got the VIX here approaching that 22 level, but possibly on the higher end. I mean, it should be elevated above 20 given the geopolitical news and events that we continue to see. I mean, you fly a fleet of Air Force across the world undetected, and do the damage that they did was unbelievable. And then the market just is like, okay, that's okay. Oil really hasn't had a big shock that people would have expected, and the VIX really hasn't spiked above 25, which I would have expected as well. So, somewhat muted. I mean, I don't know. Do you make anything of that, Joe?
Yeah, we're up small. I think what we make of it is that we don't know what the next move is going to be. Now, I can go back in history and point out times where there's been similar. You go back to 1991, the first Persian Gulf War, when after the U.S. had won that conflict, Saddam Hussein set fire to all the Kuwaiti oil fields, a lot of the Iraqi oil fields. Oil had a huge spike at that time, and the U.S. economy went into a recession. Could that happen again? Yes, but we don't know. Of course, is the whole point. Everyone's saying, "Hey, the Strait of Hormuz is going to be closed. It is closed. It's been closed. The ships are going back. Ships are on fire." Nobody knows right now. Right now, all we can do is look at the prices and say, "Hey, oil's not out of whack yet. We'll cross that bridge when it happens."
Well, I mean, I guess let's take a look at the VIX futures and the skew maybe and see if that has any other indication on volatility and where things might go. I mean, I'm looking at the skew here. Obviously has been on the up move. I would say maybe a faster, steeper rise than what the VIX was expecting. We looked at that green support line for a number of months now, where we've seen a successive higher lows. It looked like the skew index was going to break down and retouch that green support line, but it hasn't. So, what does that mean? It means there is some sort of put insurance buying going on, right, Joe?
There is some sort of put insurance buying premium on it. It's a little bit over where the VIX is too. So, we're making a little higher high here. Look back to this VIX chart, not really making a little higher high there. So a little bit of a signal, a little more worry on the put buying than the VIX physical itself. So it's a little bit of caution, something to keep out of mind here. Again, if we get a higher high here, that's something a little more meaningful to me. Haven't quite reached that yet. It's amazing. Like early in May, we had like a potential U.S. downgrade, like risking the market. But now we have potential worldwide war. Maybe that's a little more bullish to the market. it's again, I just go back to my point. Nobody knows. Just kind of have to take the prices as they come. And bottom line is, Brian, I think for me, I always feel the same way, even though it seems a little bit more so now. I always feel like we don't know what's going to happen next. I always feel like the market climbs this wall of worry. And over history, that's what's happened. If it's in the newspapers, it's a little bit scary. That's why it's there. Things are a little different now. I'm not going to sugarcoat this at all, of course, but we don't know the next course of action. But there's lots of things going on which kind of counterbalance things, which that we don't really realize as they're happening. Like maybe people are producing more oil right now because they're worried about a shortage. If there is no shortage, maybe oil plummets lower. Like it's things that we just don't know right now.
Yeah, there definitely is some uncertainty. That's why the VIX is higher. Let's just take a look at the VIX futures curve, and then maybe we can. I think maybe some of the technicals in the market, as we get into that macro picture that we like to talk about, maybe that the technicals maybe give a little better indicator of how people should be trading this market. When I look at the VIX here, the VIX futures trading kind of above where they were, a week ago. The VIX itself, the VIX futures, kind of in line where it was a week ago. When you look further out, it's obviously well below there because that considers the whole April volatility shock on the tariffs. We've probably mean reverted right where we kind of need to be. So again, that kind of goes into the unknown. It could move either way. So VIX, I'd like to say every week to week that we're on the show that VIX and volatilities tell us some little secret on the market, but it's kind of all lining up in this little middle, could go either way. But I think some of the technicals in the market, Joe, will kind of point that out and maybe give us some indication.
The technicals pointed out, but maybe this kind of just highlights my whole thesis to investing anyways, Brian, is that I want to stay invested for the long term because I think over the long term, stocks are going to go higher. I'm never going to change that point of view as long as America is the number one country in the world place to invest stocks. Money's still going to come to America. So that's number one. Number two, while the market's going to higher, there are going to be periods of volatility. There is going to be little blips in the market. So that means that gives us an opportunity as volatility traders to take advantage of that. When these volatility runs higher, we can add into our stock positions when they're lower. And when volatility is lower, it's a time to buy it in because volatility, of course, unlike the stock market, doesn't go up forever. It doesn't go down forever. Instead, when it's cheap, as it has a tendency to revert to the mean, to go back to the average. When it's high, it has a tendency to revert to the mean, to come back to the average. So it's a great way to trade that actively. And that's where I think the best way to be invested in the market is for the long term, actively managed.
Yeah. And, obviously we do that for clients. You're not just talking about yourself, but clients that we work with, mutual funds that we portfolio manage. That's kind of our goal, is long equities, long volatility, use volatility as an asset class to sort of manage the risk in the market, try and help de-risk portfolios that way, stay invested, lower your beta exposure to the market, but also continue to get the unlimited upside to equities and stocks. Like you said, if the U.S. market and the U.S. economy continues to have a tailwind, then we will participate in that.
Yeah, and bottom line, I don't mean to sell my book. It is coming off of selling my book, but it is just more so right now. I always feel this way. The current state of the economy, markets, global position just makes me feel more convicted in that investment thesis today than ever before.
All right, so what do we got on the macro picture if there is a directional play right now?
Yeah, so we know about this big story over the weekend. Of course, the U.S. came in and entered the conflict by bombing some nuclear sites. Is that going to lead to more confrontation between the U.S. and Iran? We don't really know. We'll be watching as that plays out. What will it do to oil exactly? We don't really know. We'll be watching it as it plays out. We're prepared for all potential outcomes here. People are saying they know. Nobody knows is the point here. Oil could go much lower from here. Oil could go much higher from here. It's just oil could stay the same. That's just the nature of these markets. We're going to be ready for all potential outcomes. and trade it accordingly.
It is interesting, Joe. I'd like to make one point though, that the S&P 500 over time on the oil front, the energy side of the S&P 500, the weighting is not that big, right? So it doesn't have as quite a big of effect on the global S&P 500 index, for example. We did up our holdings of ExxonMobil a little bit over the last couple of weeks as we sort of saw oil starting to bottom as maybe something to hold as a value play. But I don't know necessarily that it continues. We're obviously watching maybe this $69, $70 level in oil to see if we continue to do that. But obviously it's not as quite as critical, but Joe, you've seen in the past recessions start when oil gets a big, huge spike. So we are still watching that.
Yeah, there's no question. It may have a smaller impact on the S&P 500 in the short term, but oil is such a crucial component in so many goods. And it is like either a tax hike or a tax cut, depending on which way the price goes. So it'll be everything more expensive if oil is higher, which will obviously harm the economy. And the reverse could be true too. If oil comes back down to where it was before, it'll be a nice tailwind to everything. So we'll watch it play out. We'll see what happens. Fascinating to me, but we just continue to have these massive news stories, and the market just kind of fluctuates around up and down as we go. Seemingly everything is super important and nothing is super important at the same time. But this week, I think most of the attention, as it should still be on Iran. There are these news stories here this week. We are going to have Powell. We'll be in front of Congress. We have the PCE coming on Friday. We'd love to see inflation lower, of course. We'd love to see the economy stay strong, and Powell saying rates will be coming soon.
Yeah. By the way, that date, June 22nd, June 23rd this week. Not January, maybe an old dated slide there, but but yeah, the PCE number is one that it does seem the Fed is watching more and more. So I think that's going to be a very important indicator. We're obviously heading into the end of the quarter here to see how inflation plays out. We did get one Fed governor last week basically say that we might actually could do a rate cut in July. So a little bit of an indicator. I'll be interested to hear what Powell has to say about that, or if he just sort of continues to downplay it.
Yeah, and I kind of seemed like that last Fed statement was kind of a good one. It was neither hawkish nor dovish, but kind of a sign that, hey, the economy is doing better than we kind of thought it would be, and that's good. Maybe it's on the verge of slowing down. We'll watch for that to happen. Obviously, there's a lot of things moving the market right now, so kind of on the back burner still for me as we're getting through this conflict in Iran. Here's the S&P 500 with the some moving averages here. Great to see above these moving averages. Great to see this moving. They're moving higher. This 50-day moving average is moving aggressively higher. Not yet at this all-time high level here, Brian. We'll see. Yeah, we'll see what happens this week. Kind of a little bit of trouble this week. We're at a crucial spot. Now there is an important level here, right here coming up at the end of the month.
Yeah, that level is something that we watch actually because we're hedged equity with options, but unlike a lot of defined risk strategies, they have to sell a call to give away the upside. We do not. We actually own volatility as a hedge against stocks, so it's a little bit different than most strategies out there. But JP Morgan Hedged has billions of dollars in a hedged equity that sells away the upside and gets called away every quarter. And that spot right there you mentioned is basically the area where they've sold away the upside. So anything above there, if I was owning that fund right now, I would not be participating in this market. I'm called away all the way till the end of the month. It's basically like, you're just go take a vacation, I guess. But there is a lot of long interest of market makers having to take the opposite side of that short call. And sometimes that starts to act as a magnet as you get closer and closer to that expiration. So
the open interest on that strike is very large. Just to kind of make it explain it just a little more simply, there's a call here that the market makers are long. They're hedged against it, so they're selling deltas against that long call. And yeah, we'll see if it turns into a magnet. If you go below it, they'll have to buy those deltas back. And so yeah, that's why it's when you have a really large open interest, specifically with the market makers being the long side, that has a tendency to turn that into a magnet.
Yeah, I mean, I do think though the 6,000 number itself on the S&P has also been acting as a magnet. We saw that last week with expiration.
Also, very large open interest there too.
Yeah, so that in itself actually could maybe potentially outweigh the JP Morgan hedged equity trade, act as a magnet, and then now all these market makers have sold enough deltas against that lower strike call that they're long that no longer becomes a factor. Maybe if anything, that becomes a level of support. It's almost like a put on the market, like you said. If it goes below it, they'll have to buy deltas. So the 6,000 is still something. When I'm looking at this, honestly, Joe, I might, if I was long the S&P, I might just buy right it with 0 DTE options every day for the rest of this week. Maybe up until that PCE release come Friday.
Mm-hmm. Yeah, through Thursday, maybe. That's not a bad idea.
Yeah.
Yeah, because it kind of seems like the upside might be a harder nut to crack right here for me, just given everything that's going on. So it kind of looks like we need a resolution to the war for the bull case, plus like no economic fallout from the bull case. Now, I think it's very likely to happen if there is a resolution to the war, but maybe that just seems it seems like further away given everything. But again, I want to highlight my thesis here that I don't know what's going to happen. So I'm open to all possibilities.
Yeah. I mean, the buy rating of 0 DTE options for the week is something that, brings in income. And I normally hate that trade, but because, you give up the upside, right? Because you sell a call right at the money or maybe slightly out of the money. If the market rips above that, you're out. And then you could potentially miss a big gain in the market. But I think these two magnets probably say the market sits still to some degree over the next week until we get more news on maybe tariffs come July.
Yeah, and that's kind of like just a little bit of experience coming to the forefront here. We have VIX higher than it normally is. We're coming up to this big options expiration at the end of the month with a lot of open interest. Kind of the experience, the understanding of how things works, our years of history options trading, giving that, even though we don't know what's going to happen, just we're kind of playing the probabilities to put them in our favor here with that 0 days to expiration call spread trade. I like that idea. I'll be looking closer at that. I do have another trade which went out to our subscribers this morning, kind of highlighting this strike here, which is of course that open interest strike, and giving portfolio protection. Also, our subscribers also got an email last week, another trade long oil while we were seeing this escalation happen. So keep a lookout for that. If you're interested in those emails, let me know, and I'll give you a little more detail on how that all works. Here's the NASDAQ, Brian. The NASDAQ is kind of doing better, maybe relatively over the past couple of months, although they have obviously lost their recent highs and lost a little bit of their momentum.
Yeah, 22,000 really seems to be a little bit of a resistance here for the NASDAQ. Maybe valuations to catch up a little bit. I could kind of see that just acting as continual resistance until we get through earnings in July here. Joe, I mean, we've always talked about it. It's all about AI and where that growth of the industries come and been, and can that push a tech heavy index such as the NASDAQ even higher? Do you expect to see good earnings that actually push us through 22,000?
I kind of do, but if you could take this year in a vacuum and kind of throw out all the news has just been crazy, but you kind of go back and remember seasonality. The year's kind of fitting seasonality pretty well. You get this hiccup in March and April, you get the recovery in May, and then you kind of sit still for the summer months, and then you have another rally coming in the fourth quarter. I think it's very possible, given all the hype, all the anxiety, all the nervousness that's going on in the market. If you just kind of throw the noise out and just go back and think of what usually happens with tech, with the market, it's very possible to happen this year. So right now it just makes sense. We had a little bit of hype, with the AI for the past couple of years. Valuations got kind of high, having a really great consolidation period while the market's digesting all this and saying, hey, the valuations were high, earnings have started to catch up to this. It's starting to materialize. There's some software companies which are producing amazing things like Palantir. The big mega cap tech, Mag 7, continues to invest in this infrastructure build out for AI, and that's not stopping anytime soon. So there's certainly possibility to say, hey, these valuations are high, they're justified, they came down, earnings have run into them. Now we're ready for the next leg forward. I think the fourth quarter is really where I'm targeting that next leg, Brian.
Yeah, I mean, we have a strategy, an AI strategy play where we use options, and we did, I would say, in the last few weeks, start to roll some of that upside optionality to the market to sort of play into the year-end seasonality. Going out using options out to January and February. The Nasdaq typically having a great fourth quarter, like you mentioned. Really, the seasonality is kind of shaping up in that way. So if you want to learn more about that, go to equityarmorinvestments.com. Click on for individuals and check out that strategy. You get exposure. You get a dedicated advisor representative for you as well. So kind of an interesting play. I think the position really seasonality is set up well for the Nasdaq later. And yeah, I mean, you bring up here the SMH chart. What's kind of interesting, Joe? I don't think enough people are talking about is AMD and their development in the chip area to maybe compete with NVIDIA. That stock has had a massive run and having some level of effect on this SMH index that maybe there's just more than one participant, NVIDIA, that's going to happen in this play. Yeah,
but you just kind of look at this chart in a vacuum, though. You say this is like over a year full of consolidation here.
Yeah.
This was the hype in AI was, over a year ago. We had this big pullback, 30% pullback here from the high to low. And yet we're right back where we were. The hype has materialized. Now we're starting to produce some of it. Can we make this next run higher? I think that's possible. I'm really pleased with this consolidation. There's nothing wrong here. Everything seems in order. I'm just looking for that next stage of growth. I think the economy stays strong enough that will happen inevitably. I'm a firm believer that AI is happening. There's no denying it. And AI is creating productivity. And we're still in the very early stages of it. We're not really entirely sure what the next meaningful aspect will be.
Yeah, but more competitors in the space, I think, is a good thing. I mean, maybe not a great thing for NVIDIA, but in terms of being an absolute market leader. But if AMD can produce something, obviously that lowers the cost because they start to compete, and it makes it better, bigger profit margins for those using the pick, I guess I should say, in the gold rush aspect of it. So this is an interesting index, really, and the SMH ETF one to watch as a leading indicator. A breakout higher might be a very positive thing for the markets.
Okay, here's kind of the problem that the market has, though. Of course,
yeah.
Not the best. We're trending higher here, obviously. This is a big level. We kind of reached up here. I think this next level, bottom line is this is going to be volatile, Brian. This is going to move up and down. I can't guarantee one way or the other. I mean, I can't even say that, if it closes, it'll likely breach here, or if there's a cease to hostilities, it'll likely go back down here. So, this is obviously very crucial to the economy to see these prices stabilize. And right here, it seems like the economy is okay. I think much higher, people are obviously worried about a damage to the economy.
Yeah, I think that lower red line was the area where you'd want to buy oil and you actually could get some upside. Now I agree. We're in sort of this unknown, but maybe you talk about that like resistance line going across that has now broken through. I mean, if there's anything I would do with oil right now, I would watch that line, and I think it dropped back into that channel between 65 and call it 72.5. Like, you break 72.5, trade maybe down through 70. That might be an interesting area to then start to stop in and short oil at that point. But now I think here it's a sort of wait and see kind of game.
Yeah, and by the way, I think the price is going to be important to me. I think this is going to move before the news happens because there probably are people who know, which might be interested in making a profit off of the knowledge that they have that other people don't know. So price is going to be important to me. I want to see a breakout either lower or higher before I have like any conviction. It's kind of in this no man's land. We are trending higher. I think people are getting more and more likely that something's going to happen. But from here I can say nobody knows for sure.
Yeah. Well, we'll continue to update that oil trade that we gave out last week, Joe. That was a good one by you. Good call there. Taking a look at gold here. Again, here's something where it looks a little like oil hasn't quite gotten above that. Like,
you know what's interesting here. Yeah, we are lower here,
Yeah.
but we had this big run up here. Maybe somebody knew something here. Maybe we're interested in buying some gold. This is very a protective play, of course. Gold is a risk off trade to say the least. But today we're actually seeing positive moves in the dollar. So the dollar is going higher, makes things priced in dollars go lower. I think that's making gold come down a little bit, Brian. But the dollar still is relatively low compared to where it was in May before that downgrade. If the dollar can recover some of that, a lot of good things can happen too. Oil will be lower, of course. So there's more than one thing moving the market.
Yeah, similar to here, I'm either waiting for some sort of breakout here in gold. If I was going to play to the short, I'd want to see it maybe even like I would probably wait till like 3,200 if I'm like, hey, gold is way overvalued. I'm going to short it. So there's really nothing to do there other than watch that like lower level. And then to the upside, you make that line right there. I'm probably not buying it until we get, strong conviction, heavy volume up above that.
I don't know. This 50-day moving average looks like it could be a spot to buy it though.
Well, actually, that's a really good point. I mean, yeah, a couple touches there, and it's like been like touching, then go higher. So yeah, maybe that is an entry point to like watch, and put something on. I guess we'll be looking at that. And look, if Powell in his testimony testifies and says, yeah, rate cut may be coming, does
good
that
PCE?
Yeah. Does that make it more likely gold moves higher again? Yeah, maybe.
Absolutely. All right, let's get to the trade of the week. We touched on it earlier. We talked about the 5,900 spot in the SPX. That basically is the 587, 588 strike in the SPY options. Right now, they got the money as the 595 for SPY. So I'm just looking to protect my portfolio, stay long a lot of my risk assets, have a nice cushion to the downside, $7 cushion. I'm going to lay out 207. Hopefully for this trade, I'm looking for this to turn into $7. If we trade down to that JP Morgan long strike on the end of the month in the SPY.
Yeah, I mean, if that acts as a magnet, this trade could be pretty good payout here. If 6,000 acts as a magnet, okay, then we move a little bit higher. This trade might decay away a little bit. So we'll continue to update this and take a look at it. But from a risk reward, you're getting a payout of, almost $3 to risk 2. So the payout's a little bit higher than what you outlay. So to me, on a casino betting odds play, I kind of like that, especially given the size of the magnet of open interest that downside can provide to the market. So let's see if this happens here. And I think maybe this is worth, outlaying a little bit of premium on it.
Now, if I were a little more aggressive, Brian, and wanted to bank more on the pin, I could have made this a butterfly, and I could sell 2 of those 588s and buy the 581. And that price was about 97 cents. So
yeah,
that was a little cheaper, a little way to play it. I was saying, it's not as good a protection. If we do trade down to 581, I'm not really protected as much on the rest of my stocks. I do like that idea of banking on a pin to look at a butterfly where I'm getting into this downside protection a little bit cheaper, but it's downside protection only to where I want it to pin.
Yeah. Although I like that. I like that butterfly play. There is a short delta trade to it. Don't have to hold that all the way to the pin to the end of the week of expiration. Could just get some short deltas on the market, make some money on the downside for a little bit without outlaying it, that extra cash. Cause I don't know that the market just rips and falls lower. So I like selling that put spread, right? The 588,
And then
581 put spread, sell an extra 588 put, buy one of those 581 puts, turn that into a butterfly. I almost like that a little better.
if you wanted to get really crazy, you could look. So you were talking about the potential of a pin. I mean, I don't know if we want to go one step further. You're talking about the potential of the pin at 6,000.
Yeah.
Then you could do you can do like a condor, do like the 602 put, sell the 595, sell the 588, buy the 581. Then you've got a little bit more of an at the money, like short ball trade right here, but you're still very risk defined.
Well, that I also like too, to flip it around. So look up, learn about
That's much more short ball, kind of banking on the market to sit here until Tuesday, which is certainly possible. We got higher volatility. It's going to be better odds than normal, given the VIX being 22. But boy, there are a lot of market potential moving events. Yet the market, we've had a ton of market moving events for the past week, and we have not really moved a ton. I've seen a lot of intraday volatility up and down. We're a little lower maybe than at the start of the month, but haven't seen big moves.
Yeah, our strategy, we've tried to scalp some of that gamma move back and forth, buying below 6,000, selling a little bit out above 6,000. So, that's another way to sort of trade this. But I probably lean more towards this like put spread, maybe turn it into a butterfly just to have like a little short protection on my portfolio for a cheap amount of money. Not bad. We'll continue to update this for our subscribers. Check that out as well. You can go to equityarmorinvestments.com, look at the trading zone section, subscribe to that. And Tradier Hub actually gives a deal. If you sign up with a new account on Tradier Hub, you actually get a $200 rebate on our subscription. And that gives you all of our 3 subscriptions as well. So go check that out. It's a good way maybe just to, play around and see if we're right, see if we're good at it. Because Joe, I think we've made some pretty good calls over the last year.
Yeah, we've made some nice money, and it's been fun to do so at the same time.
All right, well, that about wraps up our show this week. Make sure you tune in every Monday, 10 a.m. Eastern, as we go live. We wait for people to come in, make sure everybody joins on in, give our ideas, our macro events, our volatility ideas on the market, and our weekly trade of the week. This is Brian Stutland here at Equity Armor Investments with my colleague Joe Teague, both portfolio managers. Go check us out. Tune in at Equity Armor if you've missed this show on YouTube or X, and we'll see you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.